Good morning, everybody. It is February 24th, 8:26 a.m. Sorry, I'm a minute late. My daughter's had a rough go of it. She's sick again, so she's home with me. But thankfully, she has an iPad now with headphones, so that works out. Try to make it a normal video, much as I can. But if she needs me, I would have to go. But hopefully, she is content. Let's look at this current market. Let's look at the watch list, okay? Happy Friday, Rosita. We have a celebrity, I think, joining us. Rosa Daza. Get ready to see her on CBS. All right. We got the VIX up 3.74. We got TNX rising. Crude up 0.8. Dixie, the dollar is up 0.31. Bitcoin's flat. We got bonds being sold. We got Dow down 0.65, Russell down 0.66, ES down 0.68, the Nasdaq's down 0.86. Okay, what do we got? Leaders and laggards. No leader to speak of. We got the laggards. Tesla down 1.53, Baba down 2.56, Boeing. That's a stock I'm interested in shorting. Okay, that's down almost 3%. They had to cut some of their deliveries, so it's negatively impacting the stock. Top sector stocks, no leaders to speak of. Well, we have some laggards. We have Salesforce, Disney, and Roblox Communications. Okay, Disney and Roblox Communications. So let's look at the sectors. No leader to speak of, and we have the bottom dwellers. We got communications, discretionary, semis, and tech routing out the bottom. Now, huge economic data coming out. Core PCE is about to drop in about a minute and a half. All right, so we're already kind of selling off currently, but this is gonna will this kick us down the road? Will this make this market fall? Will we finally break this will we finally break out of this 200-day moving average in both indices? Let's see. There's a Fed Mester speaking right now too. A lot of Fed speak today. I'm just getting the chart set. So let's see what this does to the market. So news dropping in 30 seconds. Now we also have so be careful, anybody day trading. At 10 a.m. you have Michigan consumer expectations, Michigan consumer sentiment. We have new home sales and new homes month over month new home sales in January. Okay, and then Mester speaking at 10:15. But I already saw some things from him. But let's just see what this core PCE number comes in. That's a Fed's favorite tool for inflation. So let's see what the market does right now. Boom. I'm waiting for the numbers to update here. We're getting some wick up. Come on now. So we got why is this not updating? That's interesting. Well, market's fallen. Going below that 200-day moving average. Do I really have to go on another site? I mean, this usually updates live for me. Obviously, I can just check Twitter. Alright, let's see. I don't know why that Site froze on me, but let's see. U.S. core PCE price index month over month actual zero point 0.6, forecasted 0.4. That is a big miss. That's hot. Core PCE price index year over year actual 4.7, forecasted 4.3. So it's hot. U.S. PCE price index year over year actual 5.4, forecasted 5. Well, that should fuel some move downward. Let me see if this. Oh, here we go. All right, let's look at these together. So you can see core PCE month over month forecasted 0.4, up 0.6 to 0.6. Core PCE year over year forecasted 4.3, actual 4.7. And then PCE price index 5.4, PCE price index 0.6. Personal spendings up month over month. Okay, so this is gonna probably fuel the move. This might fuel the move lower and break and hold under this 200 moving average. We were already selling off, and now this might just broke the camel's back. Just to give you, for instance, the ES is down 1.04% now, and the Russell's down 1.09. The Nasdaq's down 1.3. Okay. Also, the 10-year yield has just rose. The VIX is up almost 5%. We're up to 22.9. All right, let's get into, now that we've gotten the bad news, why don't we go into a little bit of a daily chart here. Just give me a sec while I pull that up. All right, let's grab the daily chart. All right. So what did we do yesterday? We double bottomed at the 50-day moving average. Now, important to note here, I also put a Fibonacci, okay, from this low to this high. Well, guess what? Yesterday we bounced off of 50% retracement of this move. It also happens to be the 50 simple moving average on a daily. Okay. However, we closed yesterday at 400. We are now 396. So this analyzation made sense while we bounced. However, this market, this is really not good for the market right now. This news, inflation's sticky. So let's get back to the daily. So that's interesting. That 50% retracement of this move from 1222 all the way till this high, put in at 22. We retrace 50% of that move. Okay, so that's a good gauge. Okay, usually the rule is if you go past 50, you close past 61.8. That usually means that this trend is going to be over. Now I'm hearing I got the time and sales with large lot orders. That gives me an alarm. I just heard about 3 or 4 large orders come in, and I can see the market kind of getting some heavier selling here. So it'll be interesting if we can really accept value below the 200-day moving average and start moving lower. Everything's just piling on. Domino's Pizza had bad earnings as well. I believe Beyond Meat had good earnings. But we're getting some, this is gonna break some people here. This move below the 200-day moving average. All right, let's get back to the daily. Not much to see here. We know what's going on. Let's look at the Qs. Qs, I did a fib also from 1.6, which is this. We made the move up to 2.2, and we bounced off the 38.2 Fibonacci. Okay. However, we closed yesterday 296. We're at 292, so we're around here right now. We're right almost around the the QQQ's 200-day moving average. Okay. Futures was a little higher than the Qs. Okay, we can look at the cash market as well. SPX, it's good to check into. So you can see the Fibonacci also right here, right? All right, triple-headed monster. Let's look at that. Now the market's starting to get a more solid red candle lower. The wick's going away. I will go back to that and we'll see it when we do the market profile. Let's go to 10-year yield. 10-year yield's been in a little range. Popped up. Okay. Little doji. Went down a little bit yesterday. Holding this. Okay. Holding this 3.9 was resistance acting as support. We have a trend intact. And can this go back up to 4? And if it keeps going, we're going to keep going down in the market. Bonds, smart money here. I mean, they just been in an uptrend here in the 10-year yields, which means bonds have been in a downtrend. That's the inverse. All right, so let's look at that dollar. Or let's actually go to the VIX. The VIX, of course, yesterday went down. Now we're rising. We're back at 22, over this 22 mark. You get over 23. We were there briefly, starting to reach it at the 24 area. We're going to start going lower. We're breaking lower right now. This is a pretty sell off right now. Show it to you guys. That's an hourly candle. That's a pretty red candle. That's a pretty, with not a lot of wick at the bottom. This might cause some capitulation lately of any longs. Okay, just to give you, for instance, Baba's now down 3.46%, Coin down 3.38%. I mean, a bunch of 3%ers now. Snow, Tesla, Amazon's down almost 2%. So, NQ's down 1.77%, ES down 1.3%. Hit you with the Lotros real quick. You can see the percentages changed. Okay, now we have semiconductors down almost 2%, tech down almost to 1.7%. You can see this market's really cooking now. We're going to a support level here, 39.63. Now you can see there's a wedge here. I had this drawn, and it's bouncing there with this support right here. So, what do we have below us? Well, we have the 100-day moving average right here at around 39.50. We have single prints still down here. So, interesting if we get a bounce. Okay, just to point out, this is now the most traded price of the last year, which is 39.90. Stay below that, we're going to probably move lower. All right. Couple demand zones down here too. Could be areas where we bounce with the 100-day moving average. And then, what might happen is we might come up underneath the 200. Have to see. Because this is pretty strong selling right now. You're taking out these lows right here with a vengeance. Get back to this VIX I just talked about. Let's go to the dollar. Let's see what the dollar's doing at the same time. Dollars rising, breaking out, unbelievable. One this key resistance 104.64 breaking out. The next resistance is 105.32. Bad for commodities, okay, and not good for equities, right? Of course, crude. Of course, crude. I was looking to short crude, and that would have been a good one. Always works like that. All right, so let's get over to market profile. Let's look at, now we have a gap down, so we can look at that. We can look at yesterday's trading. Now we have a gap down, so this is less import to talk about what happened yesterday because now we have what's going on now. So let's look at our current situation here. So we're gapping lower. Price is right here, 39.66. Okay, we have single prints from the past. That means there was emotional buying in the past. These could definitely get taken out. There shouldn't be a lot of support there. We also have the 100-day moving average here and a naked VPOC from the past and the demand zone. I expect us to come in here and possibly see if we can tag those, right? So since we have a gap, we have to make sure to know 39.74.25 was yesterday's low. Yesterday's high is way up here, 40.34. All right, we got the overnight high here at 40.23.25. And right now we have an overnight low of 39.63. Does that hold? I don't know, but right now that's our low. But we're gapping lower. Okay, we are gapping lower. Breaking below this 200-day moving average, breaking below the most traded price of the rolling year. Can it hold? Okay, now let's talk about what's happened of late. Yesterday's couple trades I talked about worked out, to a T. So now yesterday, right? So let's look at where we closed. We closed here, right? So we opened here in the overnight, had a little movement higher, right? But we went up to the most traded price of yesterday and sold off the rest of the session. Okay, so this is pretty much, call it 95% net short. Okay, that's very important. Now we're working our way into the single prints. Okay, now the single prints don't mean anything in an overnight session. That would only mean something in the when we actually open. Okay, so here's our gap fill with the low here. So I always say big gaps are hard to trade. All right, but what do we have? We have a 90% net short overnight session. And you can see, let's look at the volume on this move down. Not a lot of volume. A little pop here, but not a lot of volume. It's kind of like a straight move, right? All right, so since we're around 95% net short, everyone's short in the overnight. And now we got single prints. See, right here. This is emotional selling, right? It's one way. It's a one-way traffic. That's what that means, okay? It makes white boxes for me. I'm going to zoom it out, zoom it in so you guys can see the single prints, what I'm talking about. Okay, these white boxes. That's one-way traffic. That means that prices only went through there once. No two-way trade. That's one-way trade. That's why they're important. Okay? And you can see there's little pockets of them throughout the night. And then we just had that big one down. All right, so I always talk about the toothpick holding up an elephant. This is why, right? You have very thin volume. Okay, so if we come back, now remember this is the 200-day moving average. If we hold prices down here, Let's get right into it. This is could be a nice fade off the open. Now look, if price starts going up here, you'll see these single prints start to get cleaned. These white boxes will start to get removed. This the plugin that I have does this automatically. You'll start seeing these boxes disappear if this dot starts moving up, because then that will be two-way trade, right? But I love seeing this because it's like, all right, okay, here we go. So here's a scenario. What I would like to see if you're going to go long, okay? And I know we have negative news, but remember, everybody is short overnight, so they got to take profits. Now, obviously, let's do the first thing, okay? Here's the gap fill. You always hear what I talk about here. How much strength do these sellers have? How much strength do they have? How strong are they, right? So we're going to test it out. How do we test it out? Well, what's our scenarios with the gap? All right, when you ever have a gap, you have scenarios, right? To tell us the market generated information. So we can do a gap and go. That's bearish, right? We can do, I'll give you all the bearish ones. We can fail to fill the gap. Let's say we don't even get up to the gap. That's bearish. We can fill the gap, and that's bearish if we roll over. All right, but however, if we fill the gap, come up here, fill that gap, hold it, start moving up into range, well, the sellers aren't as strong, okay? But we have something very special here as a 200-day moving average, so that could act as resistance as well. Okay, that doesn't mean the sellers are just shut off here. It just means that, okay, people are taking profits. Let's see what the market does, because this could be the short. Okay, so let's get into some trade scenarios here. Now, what I would like to see, all right, in a short, I'm sorry, in a long, off the open, I want to see this gap. When you gap down like that and you're holding the bottom, they haven't taken profit yet. It might happen now though. See these white boxes? They're starting to get removed because it's two-way trade. All right. Remember, the low is right here of yesterday. So now the gap is smaller. But let's just say we're here. I would like to see a push lower a little bit. And let's say we open here, push lower, and we come through the open with vengeance. Your stops here. You get long. First target is gap fill. Second target, I would say 200-day moving average at 39.83. I don't know how much you get out of that. I mean, out of much farther long, you could hold a runner or something like that. But that's what I would look for, that fade. Take advantage of these single prints. Okay, that's one I'm looking at. It's not an easy trade. Okay, and just remember, we have 10 a.m. Michigan consumer numbers coming out. All right, so also, what's in the cards? If you don't want to do the fade, but the fade happens, and well, there's the gap fill. You can come up here. We hit the gap. We can't go. We're probably going to roll over. First target, you target the overnight lows. Single prints target, and then you can target the naked VPOC, which is also the 100-day moving average. Second short also is if we fill the gap. Now remember, we have that 200-day moving average here. If we can't come over that, okay, and even pop up to the most traded price of the year, I'm not saying we have to, but even if we went up here and started to roll, you could do one of those and short here. Target the overnight low, then the single prints, then the naked VPOC and the 100-day moving average, and there's a demand zone down here. Those are the shorts that I'm seeing. Now, any kind of strength, real strength, the market's going to have to come up here, fill the gap. Now, they got a lot of work to do. 200-day moving average. Just got to get past that. Then they got to get past the most traded price of the last year, the last year, the rolling year. Then they got the 50-day moving average. I would say there's a lot of work to do here. So that's a tough road, especially with this negative news. Could it happen? It could. Okay. All right. Let's look at the Nasdaq. All right, Nasdaq scenarios are the same. Just trying to make it so everybody can see it better. All right, scenarios are the same. So we have our yesterday's low at 120.28. We have our overnight low 119.74. We have single prints from all the way here. We have the 200-day moving average right here. Okay, most traded price of the week 121. So we got a lot of obstacles above us. Okay, same thing though. Do we fill the gap? Do we fail to fill the gap? Same stuff. It's the same trade. Fade off the open. Okay. We're single prints right here. So, like I said, I would like for me to be down here, come down, rip up through the open, target that 120.28 yesterday's low, and then you can go for the 200-day moving average. And if you're really lucky with all this, you can target to most traded price of the week. All right. Now with this negative news, you might go, well, I'll wait for the short, and we could come up here to the gap, then you short that, target the overnight low. Then we got a demand zone about 119.40 down here. Okay. Secondly, if you want to wait even longer, you can see how it works with the 200-day moving average around 120.60 and see what it does here. If we come down here, retest it, you're probably going to want to short down to that overnight low, then down to the demand zone. And of course, the real strength is if we did move all the way up here, got through all that, got through this. Okay, once we get above this, the most traded price of the week, then you got some legs. That's what I would say along. That's the only time I'd be interested in along, is if we can hold above this, and then I would target this demand, this supply zone here, and then most traded price of yesterday, which is 122.08 right here. But you have to get, for me, you have to get over that, the most traded price of the week, of the rolling week. Now that's going to be it for me right now. Okay, remember, we got those single prints. If you want to be ballsy, off the open, it's a hard trade to do because there's a lot of volatility off the open. Okay, but that's going to be it for me. Hope everybody has a good weekend. I'll try to do a short or an update today of what I'm seeing, if something of importance. Remember, 10 a.m. 10 a.m. Don't be careful. That home sales, you got Michigan consumer, like at 10 a.m. There's going to be volatility from that. Get out of a trade. Okay. Stay green, everybody. Give me a comment, like, or subscribe. Of course, if you want to, follow me on Twitter. There's the handle for my Twitter. And, interact with me. I don't mind questions. So um, let's get this market, all right? And I'll talk to everybody on Monday.